Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update. This will be a little different one. Hopefully, it'll be a lot shorter than my typical weekend. I call this Markets Fail at the Double Tops. Is the bull dead? I'm doing this on February 22nd, 2025. I'm actually out in my New Mexico home and flying back early in the morning on Saturday. So, since I'm not sure when I'll have another chance to do it, so I'm doing it here early on Saturday morning before I go to sleep. You'll notice there's a new email address added there called marketmripro@gmail.com. If you have questions about the platform I use today, that's probably the best email to use. My other one, the hcsidoc@gmail.com, it's not .co, it's .com, also will work. A little bit different today. As you'll see, I have multiple platforms. I designed a new software tool just to make my weekend reports easy. All my favorite analysis are built into one system. So I'm going to use that because I want to go to sleep and don't want to take an hour or two to do this. These are not scripted, but I basically follow the same um, walk through the markets, no matter what platform I use every day as I do my preparation. As always, this is for educational purposes only. Anything we talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I have tools for multiple platforms, but I am an independent trader. If you're looking for my usual wealth charts driven review, I will post something late Sunday night or early Monday morning at stocksanddocs.com, and you'll get what you are used to seeing. And that one will be purely in wealth charts. I do have a number of platforms that I work with, and Wealth Charts is a wonderful platform. It's probably the most full featured platform. Plus, it has the not open architecture to design your own, although you can. They actually built that in, but open in that multiple other educators have had their tools put in. TradeStation, I have tools for that. And TradingView, Metastock soon, and I'm going to show you tonight Market MRI Pro as I work through my weekend review. I also have a new Google group. It's called Top Down Trader. It's free. It's not for solicitation. It replaces a small email list where I sent my nightly opinion of the market in a short video and some one-off education programs to the list of subscribers. You will get notice of when I have live meetings. You'll get discounts on any products that you might purchase. Again, it's free. I have no anticipation of ever charging. And when I get to that point in my life when I can actually retire, I'll go back to Discord or some other platform that's more of a intraday real time. You may ask, if I do so well in the market, why aren't I retired? Well, because I've done really well building businesses and selling them, and I've created some real wealth for myself, my partners, and my employees, and I'm not ready to stop doing that. So I have a large healthcare tech company that I run by day, and I trade. Frankly, I do most of my trading at night or my picking at night, and then set up some automated orders when the day starts. How bad is this market, or how bad is it going to get? I think it really depends if there's a recession or not. Friday sell-off, there's probably a lot of reasons. It's option expiration. There's a lot of jitteriness in the market. But I think what we saw was University of Michigan, my alma mater's consumer sentiment came in a little softer, and it drove concerns about the consumer and their concerns that inflation risks are higher. We also saw some softening in the housing market. What will we see, or what might make us think we have a recession? Well, if you look at the 10 minus 3 month and the 10 minus 2 month yield curve, they both had dipped below the zero line And if you look historically back to the 80s and before, after a dip, you get a recession. After a dip and a recovery, you get a recession. After a dip and a recovery, every time the 10 minus 3 and every time the 10 minus 2 dipped into the inverted phase and then crossed back above, it was followed by a recession. But the question is when. And you could see that those recessions don't necessarily occur immediately after the recovery. So when I look at those two, I think, why would this time be any different? We're going to get a recession. Again, when? Now, if we're going to get a recession, we might expect to see a spike in credit tightness. And if you look at where we are right now, there's no evidence on this tool from Fred, the ICE BOA high yield index options adjusted spread. So we don't see credit tightness. And the other thing is typically you get a recession when you drop below minus 20 on the Philadelphia Fed diffusion index. And we are sitting now at plus 18.1. So do I think we have a recession anytime soon? No. If we don't have a recession, then I don't think this is going to be a deep sell off. And I think we're going to pull back to maybe my second line of support and bounce. And we'll take a look at that as we go forward. But this is critical because if I'm wrong and we have a recession in the near term, then I think the market could fall quite a bit. One thing that has me worried is our leaders index is on the verge of dying. It's on life support. This is a list of stock leaders that I put back together back in November. And as I learned from my mentor, Ian Woodward, someone who was a very close follower of William O'Neill, Cancelin, you build an index of the leading stocks. And when that rolls over, get out of the market because typically the leaders will fall first. And if you think about what's happened this past few days, is some of the leaders, AppLovin, for example, ServiceNow, have taken a major hit. Even things that never seem to go down, like Palantir. Well, we're sitting on life support. If we break down any further, then we're sitting on the 50. I think I'll say the leaders index is dead, and it's time to start thinking to the short side. Know your news and earnings. We've got Dallas Fed heads. We got a Case Shiller on Tuesday, nothing on Monday. Consumer confidence for February. On Monday, you got more Fed heads, got new home sales on Wednesday, followed by Bostic speaking. On Thursday, you got jobless claims, durable goods, more Fed heads speaking. It'll be interesting if they don't try and talk up the market because I don't think the Fed wants to be the one that sticks the knife in the heart of the bull. And then below, you can see what happens on Friday. We get the PCE complex. So with all these Fed heads speaking and some important data, especially that PCE, we're going to have market movement. And oh, by the way, we're not yet done with earnings season. And if you look at what's going to happen this week, Domino's, him and hers, one that sold off hard this week, as did Tempest. Home Depot on Tuesday, Cava, which sold off on Tuesday. But I think the big story on earnings is going to be Wednesday afternoon. NVIDIA, Snowflake, Salesforce. I think they're going to give us either an all clear signal and time to buy, or especially if NVIDIA talks anything negative, delayed rollout in Blackwell, any issues, concerns about Deep Sky, DeepSeek, I think that could all be very serious for the market. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Just to remind everybody, we are having the Orange County meeting this year, June 6th to 8th. If you want more information, Greg Mills, GAM72054 at AOL.com. Just give him a hard time about still having an AOL email address. You got mail. But this one would probably be in the $300 to $500 range, depending on what amenities we're going to provide. We do this one cheap because it seems to be that that's what the folks want, a low-cost meeting, 3 days, lots of speakers. All right, let's take a look at the market. So let's start with my timing model first. So we're going to, did I just do that? I did that. I have a tendency of having things come out when I don't want them to. Let's start with the weekly. So it's going to update. The weekly is a more dominant model that I follow. And you could see here the uptrends are in each of the markets, but you'll notice down here that the spider, which went in, just barely broke into a sell signal, remains in a sell signal. The Qs are still in a buy. The Russell has broken down and is in a sell. And the Dow, the diamonds look on the verge of a breakdown as well, but are still in a buy. So on the weekly, we're 50-50. Top. On the daily, we had some changes this week. The first one is everything as of Friday on the daily is in a sell. So my posture has gone from neutral with a bias of thinking we might go higher, but with concern, to now neutral to negative. And what you can see here is, again, the new sell signals everywhere, the breakdown. Now, this green line represents the 3-month new high, new low. It is not close to giving us a reversal signal. When it gets down in this type of a level, as we saw here, the markets have a tendency to reverse, but we're not there yet. Now, if you want to still be bullish, just take a look at the monthly signals. And I don't normally look at these, but the monthly signals are still very, very powerful. But if you look at the monthly, you could see the double top that we saw here on the Qs. So the timing model tells me at minimum, be careful. Now, another thing I like to look at is the buckets. And the buckets are another thing that tells me the status of the market. Now, this is a very far left shift that tells me in each of these indexes, the majority of the stocks are now at the bottom of the Bollinger Bands. When we start to get 25 to 35% of the stocks in this zero category or below the Bollinger Bands, we typically get ready to bounce. 22% on the NYSE, 25% in the S&P 1500, 27% in the Russell 2000, and 18% in the NASDAQ. So we are getting oversold. 22, 25, 27 are big numbers. They can get much, much worse, especially if you look at some of the bear markets we've seen and some of the recessions, they can get minus 50. But we are getting to a point where we might start to be looking for a short-term bounce. Market, let's go look at the indexes here. Go to the US indexes. And I'm going to pop each of these out individually. So if we look at the spider, bring a little bit more data in, you can see the spider has been in a huge uptrend. I had drawn this trend line as support with 1, 2, and 3 hits, and we broke through on Friday. Now we are sitting here on the white line, which is the 50-day moving average, and that was frankly my first target on a sell-off. Probably the second target is going to be where this dotted line is, about 576. We're currently at 59, about 600. Let's see where we're at exactly. Close at 600. So we're not that far away from, frankly, 4 or 5% will get us down to this area here, which has been an area prior support. But hopefully we see a bounce if you're bullish off the 50 here. But definitely a negative looking market. You can see the weekly bongo, which is the one on top, actually turned red. So a little bit of a weakness here, and this is the all-time high. It's hard to believe looking at a daily chart that we feel so bad about that 3 or 4 days ago we were talking about an all-time high here. If I look at the Qs, so the Qs have not quite pulled into the 50. They had a double top area of resistance that they broke down from, a very bearish candle down to 0.07 on Friday. Still hoping for a bounce at the 50. If not, where are we going down to? I think where that dashed line is not surprise me. And if it takes 3 or 4 days to get there, we'll probably have a rising 200-day at the same area. I'll be looking for a bounce here at the 50. So we could be close to bouncing on the two leading indices. Now let's get to a little uglier. Let's take a look at the diamonds. So the diamonds were in a downtrend here, lower highs, lower lows. They actually had a breakdown down 1.86% in the market on Friday, and they took out their 50. So really an awful looking chart. Where's my target going to be? I mean, I think you're going to get down to potentially, you could get down to the 418 level. But again, that's just 3 or 4% to go. We have not broken below that 200 in quite some time. You'd have to go all the way back to November of 23 to get below the 200. So do we find some stability in this area here, which is a little bit above where the 200 is? And that would be my target if this market continues to go down. What about the Russell? This has been the weak sister for a while, and you could see it has now pulled down to the 200. So if you want to be bullish here and not go into sell mode, look at what happens the last several times on a daily chart that the Russell has pulled down to the 200. It's rapidly reversed. So if you want to be a bull, we're on the spiders, we are pulling right into the 50. In the Qs, we're right above the 50. The diamonds, unfortunately, have broken through, which is unfortunate. The Russell is at a place where it's bounced multiple times at the 200. No surprise, the fixed futures were up significantly, 14%. Still low in their pattern, but are they getting ready to run? As my dear departed friend George Lee used to say, when the VIX is high, it's time to buy. When the VIX is low, look out below. It has a lot of room to run. And then if we look at the dollar, is one of the things that I look at thinking about what's good for my equity positions. A weak dollar actually supports my stocks. The dollar is bouncing around the 200, and if I'm telling you the stocks are likely to bounce here, you wonder if that would be the same thing on the US dollar. If we look at commodities, actually, before I do that, we go back to the US indexes. And what I like to do is just stick just look at the weekly charts from high above. And I can't tell if they switched. They have not switched. Are you not going to switch for me today? Well, I think did it switch? No. All right, we'll come back to that later. Let's take a look at commodities. I just did that again. Here they are. Let's take a look at commodities. Gold has had a big run up, flattening the curve. On Friday, it was down. It was kind of flat, down a little bit, 0.09. Silver down a little bit more, 0.74. Oil has pulled into support at the 200. Those that have followed me for any length of time know how much I talked about natural gas and its 200-day moving average, and how I didn't want to go that. I was wondering, all right, come back. So now, how long you can see how many times it failed at the 200, and we were looking for it to, here was a breakdown and all the failures. And what I was looking for it to do was, when would it break above the 200, retest, and then perhaps go higher? And I think you're probably aware we are seeing a nice little rally on natural gas. It broke above, retested, ran up, retested, and now it's breaking out, and it doubled in price to $4 at the if you're buying natural gas. This is UNG, which is the ETF. So natural gas is strong, and you could see supporting the market normally, but not today on Friday. The 10-year was down 1.88%. And the 30-year down 1.37. So if you want to be bullish, you could see that we've really come off the highs on both the 10 and the 30-year I just wonder if that's because of economic concerns and tariff concerns, um, and not because inflation is going away. So interesting markets. All right. The buckets we looked at already, and we talked about, oh, I've done something here. This one. We already looked at the buckets, so let's look at market breadth to see if we had any signals. Now, what you have on market breadth is you have the NYSE on the left, the NASDAQ on the right. These are daily charts with a 50-day moving average and a 200-day moving average. And you could see that the NYSE had a much deeper pullback than we saw on the NASDAQ. They both have pulled back, not quite to the 50 on the NYSE. The NASDAQ breaking through the 50-day moving average here. And if we look down here, we could see a number of things. In green are the stocks above the 17, and white stocks above the 50, and red stocks above the 200. At lows, we get down here, and at intermittent peaks, we get up to the top. So we have rolled over here, so breadth is decreasing. But on both the NYSE and the NASDAQ, we have not broken down to the point where we're getting a signal. Now, this is the NASDAQ, what we've looked at before were the Qs, the NASDAQ 100. So this one is actually broken below the 50, where the NASDAQ itself had not. Down here, we have new high, new lows. We've got AD lines, and we got up-down volume. And you could see on the NYSE, they're all negative, as they are on the NASDAQ, and we have no new market timing signals below. So breadth is getting weaker. How will I know that we've hit a bottom? Well, we have this thing called the Hindenburgs at the top. My partner Praveen created a signal called the defib if we get a really profound bottom. But I'll be looking for things like these green lines, which is called a eureka, the green pluses, which is a bingo. The bingo is baby out with the bathwater. It's a signal you see when we're done going down. The eurekas are bullish, exuberant signals, which you see as you start to move up. The red is the phoenixes, and these are the more bearish equivalent of those eurekas. I use ratio charts in multiple different platforms so that I can get a sense of what's working in the market and what's not. And it's really done well in wealth charts as well. Don't ignore Bitcoin, but all the others are S&P sectors with a ratio chart to the spider. And if something was moving a lot today, you'll see a long white line. And if things are pointing up to the top, you'll see we've had some strength over a period of a while. Notice that Staples is now moved up into the lead or as a leader now. Utilities have picked up, real estate has picked up, and healthcare has picked up. What do we see there? We see rotation into defensive plays. Technology, which had been holding up, turned down today. You see the long red line. Discretionary is weak. Communications remain strong. Financials has weakened. Energy neutral. Materials neutral. This is a switch to a more defensive pattern. So we've now looked at the market. My hope, if I was bullish, and expectation is that we are at a natural place, especially on the Qs, the spiders, and maybe even the Russells to see us bounce. But the market doesn't have to listen to what I want. I think we're at a critical junction. If we don't bounce beginning of the week, do we go down and test that 200-day moving average? Another 4 or 5% pullback? That might be in the cards. This here is a layout that has my favorite indicators, my high-low jump, which is my extension indicator, my weekly and daily bongos, which are a measurement for trend. On the chart, I have a relative strength, which is this white line. You can see it 84%. I'm not in love with the stock. It's just the one that was there when I started. White is a 50-day simple. Red is a 200. Green is a 17-day simple. Down here, we have regular volume. We have my dots, which is an EMS signal, which is a green line when it's bullish, red when it's bearish. The CPR indicator, which is a trading system I use. And then 4 dots include gaps, volume, breakouts, and momentum. This is the PSAR. Down here, if it's blue, that's a green candle low. If it's red, it's a red candle high. Single candle reversal signals. This is a relative strength versus the spider with a moving average, and this is an OBV with a moving average. AS layout takes all the stocks in the NASDAQ plus the NYSE plus the Amex. It filters them for $1 and 100,000 shares, and then it will give me these in my JAS list. You can see it's 3,461. I can then filter these by price change, percentage change, how many of my signals are positive or negative. I look at my trending indicator, is it uptrend or downtrend, and how many days or weeks. I have 3 momentum measurements, short, intermediate, and longer term. People, relative volume, what are the stocks that had the biggest volume moves? Volume is often an indicator of something happening. It can be good or bad. So here's I don't know, MLGO, kind of a cheap stock that was dead, had massive volume. I don't think that's one that I care about. ZUO is a Chinese stock that looks like a takeout, so that probably doesn't mean a whole lot. 8KAM, this is one that had massive volume on a breakdown. So you can actually often capture some of these really big changes by looking at volume. I'm a top-down guy, so let's go into the top-down. Let's rank them by 2-day or short-term momentum, and let's build a group of stocks that are in the 3 strongest: real estate, staples, and healthcare. There's 1,008. Let's rank them by 2-day momentum, and you can see a lot of stocks come up to the top. And what's interesting is some of these staples. Well, CELH is a story. Up here, I can see that its earnings came out on the 20th. And interestingly, the stock rallied despite the fact that year over year, here's the February quarter, you had a reduction in earnings, but they had a big surprise over expected on both earnings and revenue. They also announced an acquisition, and you can see a big move that the stock made. There are some interesting stocks here that I wouldn't normally look at. Hershey's, this is one where the relative strength is 24, but in times of market entropy, some of these staples that pay dividends rally. Was this one have earnings out already? Earnings have came out the 6th. And look at this, it had a significant change, 202 to 269, so a 33% increase, and a surprise on both earnings and revenue, and you can see the stock has rallied. Clorox is another one of these consumer staples, and this one, is this what I like to buy? No. But if this market continues to be weak, some of these staple stocks, or in our program, consumer defensive, look good. Vertex is one that I've talked about a few times. When it was moving up, it's now broken out above the 200. If biotech was to show some strength, this is one that I like a lot, and I'll be watching as well. So you can search for stocks by highlighting 1, 2, or 3, or as many sectors as you want. But you can also look and do the same type of analysis. Let's just look at the ones that had the highest percent change. And let's look at the industry groups: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So out of about 140 industry groups, only 10 were positive. 109 stocks from those different industry groups. We rank them by the 2-day. We have, here's CELH, Hershey and Clorox, what we just looked at. Pepsi, not a typical growth stock, but let's look in here. Are earnings out? Earnings are out. The dividend it pays is $5.33, which is a 3.44% annual yield. These are the kind of stocks people who have to be long hide in when the market sells off. Smucker's jam, not something that we're typically looking at as well. So it looks to me like it's a market where people are being very defensive. So the top down person in me is going to look at the top couple of sectors, the top couple of industry groups. The other thing you can do, if we had looked at consumer defensive, and there's 134 stocks, you can actually come over here and look at the various sectors. So beverages have 10. Well, I already showed you two look good, Celsius and Pepsi. What about Coca-Cola? Look at this. Again, we're not talking the exciting, sexy names of rah, rah, rah growth. Earnings came out. I guess they were due on Friday, so we haven't updated them yet. So they came out. But look at this, took out the 200. I'm sure the earnings must have been good. Relative strength looks good. OBV, not where I'm usually buying, but maybe it's something we should be looking at with the market in a tough time. The other way to start looking for stocks, and I'm going to show you what I do here, and then I'm going to show you one of my favorite tools in TradeStation. Quick drink of water. If we look here at our list, I could do the same thing. I could sort them by one-day return. How do I pull this all the way up to the top? All right. Or I could look at momentum, and let's look at short-term, 2-day. And I could start looking at some of the best stocks. Melli, Mercado Libre. I know this is an earnings move. I'm not sure if it's in here yet. Yep, you could see $12.61 compared to $3.25. What a move. 288% change, a surprise of 2351, a revenue change of 42%, a surprise of 4%, and you could see what happened. It's an expensive stock and it had a big run and it's extended. Let me put a filter on. Let's filter out stocks that do not have volume of 500,000 at least $5. Viker, this is a technology company which I believe had earnings on the 20th, so they're out. They're just not yet in the program. Breaking out. OLED, this is one that's really a bottom fish, but you could see it had an earnings and a revenue surprise, even though sequentially the earnings were lower. $2.20, $1.22, back here $1.29. It's a bottom fish. There's your CELH. SCI is one that also, this is I don't know this company. I thought it was something different. Here's an energy, a solar company, perhaps infrastructure play that had a big gap up. I wonder if this is an IPO. So I'll look at the weekly, and then I'm going to look at the monthly. Yeah, this is an IPO. I don't know why we don't have the fundamentals in it, but that one was up significantly in the market. BABA is another one. Beautiful run here. And you could see it's been 3 years since it's been to this level. And BABA's earnings are out. They came out on the 20th. They had a quarter over quarter, almost 10% beat, and almost a 10% surprise, and a massive revenue increase, and a surprise on revenue. A couple of other things here that I like. INOD is one of the better looking stocks. It too is just had earnings come out with a surprise. There wasn't a prior February, so there's no change, but a big surprise over analyst reports, and you can see the big move that it had. So there are lots of ways to rank things, but there's another way I like to do things, and that's to scan. So I have found that one of the best tools that I have is when I get a momentum signal 2 days in a row. So I'm going to add to the volume and the price my 2-day momentum signal. And let's see if we have any stocks. We may not. Let's look what we have. Pepsi, which we already looked at, kind of a bottom dweller. Coke at least has taken out the 200. AMN, which is a healthcare services stock. I think it's kind of a staffing company. Again, kind of like Pepsi, it's sort of a bottom fish, double, triple bottom. Probably going higher, not the kind of stock I usually buy. But how about JD? JD is one of the China stocks. We know China's doing well. Earnings are not out to March 6th, so I might want to be careful. But I have 2 weeks before they come out. This one had a nice session. And look at the two blue dots for momentum, breakout, and volume in a row. You see the green breaking above on relative strength and the white breaking above yellow on volume. That's what I like to see, and it's not extended. So JD looks good to me. And here's another one of those staple stocks, General Mills. Um, I have other scans built in. Another one that I like is looking for stocks that are in a weekly uptrend that just switched to a daily uptrend, and that would be my multi-time frame CPR buy. And let's see if there's anything here. PDD. This is another Chinese stock. This one's had a massive rally. C1 looked interesting. Clearwater Analytics, a big run up, a pullback, and now a breakout. It actually held up pretty good, was up 4.41%. Let's see about the earnings. Earnings came out the 19th, big growth and a surprise. I think we see the ingredients of strength in the market, even with the sell offs that we've seen. Anything else here? Tennyson is another Chinese company that's doing well. Not a lot of surprises on earnings. Their next earnings are March 18th. PRMB, I believe, is a water, maybe not. I think there's Primo Water. This is a different one. Primo Brands, beautiful uptrend. Here's your pullback to the 50 and a breakout. Earnings on the 20th don't look so hot, but market liked them. Brown-Forman's another one of the beverage stocks. This one's kind of a beat up one. Church and Dwight's another the usual winners when staples outperform. So again, different tools to bring up different types of stocks. So I think this is a tough market. I'm going to be very careful in what I do, and I'm not going to go in on Monday morning expect to buy. If we sell off Monday morning, I'll be looking for a reversal at a time to start thinking about going in. If we have a big move up at the open, I'm going to be thinking bull trap and be looking to potentially take my profits or look at entering some short positions. I do think we're going lower here. Now, I have my tools in TradeStation, and we developed something in TradeStation which is unique. Now, what makes TradeStation to me a great platform, and then the problems with that great platform. It's a great platform because of radar screen, where I can put in a list of instruments, different indicators across the top, and I can look for signals during the day, and it will fire all day long when I get my signals. The challenge with radar screen is you get 400 or 500 instruments in there, and it's going to start to get wonky, and my TradeStation has a habit of turning off or getting an error, and I have to restart it. Radar screen's great though because it runs intraday. It treats the current bar as closed, whatever your time frame is, and you could be looking for signals during the day. The other strength is the scanner, something that I use all the time. Um, and the thing about the scanner is that if you scan on the daily bar intraday, it gives you the signals from the prior day. So it's really, to me, it's an end of day tool. And again, it's kind of wonky in that I've had reliability issues. And my buddy John Person is probably right. It's probably because I'm putting too much into the scans and looking for too many signals. So what we created is something called the trading app. I have a partner named Van, who is a brilliant TradeStation programmer. And what it looks like is a radar screen, but it really is a scanner. And what we do is we pick a user list, and I picked one called the weekly consolidated buys that I created, which is about, and I update it every Friday, about 2,000 different stocks. I run it once, and then I have a way to filter the results. And I might look for a specific pattern. So if I was looking to go long, let's just look at a couple of stocks. Q, pull back an uptrend with a Q breakout. Now you would have to have Sagar's Q tools to use this screen. Now that's going to then take a look at this and give me a short list of stocks that made sense. Well, we just looked at that Vicar, VICR, on the prior platform, and I thought that it looked interesting. Never good when VIX is sitting here as a leading entity. But let's take a look at, let me write these down and we'll go look at them in my Market MRI Pro. WKC, VICR, which I think we looked at already. Volatility, that's a bad sign when that's breaking out. Pepsi, we've already looked at. BTAL, don't know that thing from Adam. KHC, another of the staple stocks. MKC, McCormick, another staple stock, and WRB, which I think is a insurance stock. So let's just go into Market MRI Pro, and let's just take a look at these very quickly. The first one it liked was, I already can't read my writing. You know I'm a doctor when that's the case, WKC. So let's take a look for WKC, WKC, and there it is, World Kinetic Corp. This is a refiner, I believe, or marketer of energy. It's looking for it. And you could see pull back to the 200, kind of in an uptrend, but kind of loose, not extended, big breakout. Look at all the blue dots that lined up here, the relative strength in the OBV. Is this an earnings story? And you could see here earnings came out the 20th, surprise and a big change, negative on revenue, but the market certainly liked that. That looks interesting. VICR, now that it showed up on the other platform, let's take a look at it. Vicor Corporation, we did look at this. Uptrend, pullback, and breaking out here. I don't, should we buy volatility? It's kind of funny that the VXX showed up as a breakout buy. Got the blue dots. It'd be interesting to see. That doesn't say much for the market. We already looked at Pepsi. BTAL was another one that made the list. BTAL. This is a market neutral fund. We don't care about the fund, so let's look at something else. KHC, Kraft Heinz. Do you notice how many of the consumer staples or defensive stocks we looked at? Here's another one rallying as the market is selling off. MKC, McCormick. I think they make the spices. MKC. Here it is. And again, it looks a little bit better because it's already broken above the 200. This is McCormick. Down here, you could see the relative strength in OBV not extended, breaking out. I suspect that means that when I draw, yep, it broke out of that trend line, and that's where the breakout signal came from. That looks kind of okay to me. All right. And then the other one that was on the list here for the longs was WRB, Berkeley? Let's see. Insurance properties. It looks like it's setting up to break out. Maybe not yet, but let's see. It's getting ready. I'd like to see it break out above that trend line. And then I'll just finish, and this is perhaps the ominous signal for tonight. These were the winners. This is my favorite in TradeStation, and probably every tool I have, combining my tools and Sager Nandy's SuperiorProfit.co's tools. Let's look at what happens when we look to the short side. And it is a wowzer. So we're going to open it up. We're going to look for retracements in a downtrend with a new breakdown. Watch how many. Kaboom. These are the bad ones. I just showed you the good ones. That doesn't say a lot of good things for what we're going to see this week. Lastly, I can import. So we put a few things, or tried to put a few things there, and then the program shut down. But I'm going to import here, import from a file. And I looked at a bunch of stocks tonight, and I had a couple of things that I thought were potential shorting candidates. So let's just see if we can find those. And maybe, hold on, I gotta go, here it is. I'm going to go in here and see if that will import them. I got it. These are, take off my filters. I always forget to take off the filters. So these were some that I looked at as potential shorts. Let me just show you a couple of things that I'm looking at. John Deere. You can almost say that one channel there, maybe there's another channel. Is this thing coming back down to the bottom of the channel? On the weekly chart, definitely a reversal type of a candle. So that was one I was going to look at. What's worrisome, I put the diamonds as a potential short, breaking here below the 50. Elevance, which is one of the insurance companies, let's go to the weekly, pull back into the 17 and failed. Bad day for United Healthcare. ServiceNow, this is the weekly chart. It failed to get back above the 17. It's breaking down. You can see on the daily, it's going to get close to the 200, which might be a reason to not short it. But I like to build a list of stocks that I think are potentially weak here. Goldman probably pulls down into the 50 and then it bounces. So these are not all things that I'm going to short, but these are things that have been strong that are breaking down. And I like to put those in a watch list so I could see if they're starting to bounce. MSI, I never understood why this was a $400 stock, but here it's breaking down. It failed at the 200 on the daily. If I look at the weekly, if it breaks down here with this daily pattern, this thing could run a long way. So I think this is a tough market. There are interesting longs and shorts. I think we have a chance at a bounce early in the week, but I might use that bounce as an opportunity to take profits or open up some short positions at a higher price. Hope you enjoy this format. Again, not scripted. And we'll talk to you guys soon, probably Tuesday. We'll see if Monday, I think I'm pretty busy, but if a lot happens Monday, I'll at least put something out in the top-down trader group. And not to just tout, but if you're not a member, why not? You'll get a video almost every night. You get my thoughts, a list of stocks that I'm looking at, and it's a two-way communication. Take care.